I thank you very much for taking time out of your busy schedule to attend our briefing today. We would now like to start Honda Motor Company Limited's financial results briefing for second quarter of fiscal year 2024. First of all, allow me to introduce the attendees today. Mr. Shinji Aoyama, Director, Executive Vice President and Representative Executive Officer and Chief Operating Officer. Good to see you, everyone. And Mr. Eiji Fujimura, Executive Officer, Chief Financial Officer. Good afternoon, everyone. Mr. Aoyama will first present an overview of the financial results of first half of financial year 2024 and full-year forecast. Then Mr. Fujimura will present the details for the results and the forecast. Over to you.
Thank you very much for your usual understanding on Honda's business activities. I will explain the financial results of the second quarter of our FY2024 and its full-year forecast. Let me touch upon the highlight of the results. Regarding the cumulative results of the until second quarter FY2024, we had high profits in motorcycle businesses in addition to the significant improvements of profitability in automotive businesses, where unit production volume had recovered mainly in North America and delivered competitive products to customers. And operating profit increased by 243.1 billion yen to 696.5 billion yen, and operating profit margin was 7.2%. Free cash flow of the operating companies, excluding that of the financial businesses, reached 732.9 billion yen, way exceeding the level last year-on-year. In terms of the business forecast of the FY2024, although tough market environment exists in China and Asia, we will revise the previous forecast of sales revenue, operating profits, and the profit for the period, reflecting additionally strengthened profitable structures as well as the foreign currency impact. For shareholders' returns, we plan to increase the dividend by 24 yen from the highest ever dividend of the 150 yen until the share split to 174 yen. We announced share buybacks at the financial press conference on May 11th, 2023, and the amount of the share buybacks as of October 31st was at 163.5 billion yen for the upper limit of 200 billion yen. Let me explain about automobile businesses in the main markets. In the United States, demands are solid. Semiconductors have been secured and productions have recovered. Thus, with the highly competitive new models that were launched last year, the result marked significantly higher year-on-year. In China, because of the impacts by expanding a new energy vehicle market and intensifying price competition, the results ended below last year. In terms of a sales outlook for the FY2024, we anticipate incremental unit sales in Japan. Nevertheless, tough market environment in China would continue for some time now, so we would like to down-revise the previous forecast. However, overall, we will achieve higher results year-on-year. Speaking of our actions for electrification, we announced the launch of a new EVs, Acura ZDX and Honda Prologue, early 2024. In North America, we agreed with BMW and Ford to establish a new company, ChargeScape, in order to provide energy services that will contribute to stable powered grid network by utilizing EVs. In Japan, we concluded a memorandum of understanding with the Mitsubishi Corporation in order to explore commercialization of energy management businesses. Next, let me talk about motorcycle businesses. In the first half of the fiscal year, overall motorcycle business performed higher year-on-year due to incremental unit sales thanks to the solid demands in Indonesia and Europe. During 3 months of second quarter, we had more unit sales due to solid demands in Indonesia and Brazil. However, overall businesses fell short of the same time last year because of the unit sales decline due to economic slowdown and so on in Vietnam and China. Regarding sales expectations for FY2024, reflecting decline in Vietnam and China, we will down-revise the previous forecast. On the whole, the business will be at the equivalent level year-on-year. Speaking of our actions for electrifications, in the Japan Mobility Show the other day, we exhibited SCE concept, which employs two sets of the Honda Mobile Power Pack E for replacement batteries. Next, this is the outline of the first half of FY2024. Despite impacts by round expenses, thanks to incremental unit sales and the pricing that reflects improved commercial values, the operating profit marked 696.5 billion yen, up by 243.1 billion year-on-year. Profit attributable to the owner of the parent during the first half, it was 616.3 billion yen, up by 277.7 billion. This is the forecast of the consolidated business performance of FY2024, despite a tough market environment in China and Asia, as well as the increase of warranty expenses that occurred in the first half, reflecting the fortified earnings structure and forex impact. We revised the operating profit expectations to 1.2 trillion yen, up by 200 billion yen. Profit for the period attributable to the owners of the parent is expected to be 930 billion yen, up by 130 billion. Foreign currency assumption is set at 140 yen for a dollar in the second half, as well as for the full year. Expectations of unit sales and PL are shown on the slide. Interim dividend for FY24 is expected to be 87 yen per share. And the dividend for the full year will be 174 yen, up by 24 yen from the previous forecast of 150 yen. That was based on the criteria before the share splitting. Next, Mr. Fujimura will explain details of the financial results and forecast.
Okay, then allow me to start the explanation. To begin with, Honda Group's unit sales for the first half of fiscal year 2024. In motorcycle operations, unit sales grew year-on-year, mainly in Europe, to 9,262,000 units. Automobile sales came to 1,934,000 units, mainly due to growth in North America. And in power products operations, unit sales came to 1,826,000 units, mainly due to the decline in North America. Next, I would like to explain the factor analysis of pre-tax profit for first half here compared to the same period last year. Operating profit grew by 243.1 billion yen compared to the same period last year. To give you a factor analysis of the operating profit, impact from sales was an increase of 219.2 billion yen due to unit sales growth in automobiles. Selling price and cost factors was an increase of 205.7 billion yen due to effect of pricing in line with the enhanced product value and lower prices of precious metals and other raw materials. Expenses gave us a negative impact of 214.3 billion yen due to an increase in warranty expenses and other expenditures. R&D expenses led to profit decline of 30 billion yen, and currency effect resulted in a positive impact of 62.4 billion yen. Pre-tax profit led to an increase of 363.4 billion yen, resulting from evaluation gains of foreign currency denominated bonds and interest received. Next, to explain the sales revenues and operating profit by business segment, operating profit was 253.3 billion yen for motorcycles, 301.3 billion yen for automobiles, 137.0 billion yen for operating profit from financial services, and 4.8 billion yen for power products, business, and other operations. Next, I will cover the cash flow situation. Free cash flow of the operating entities, excluding financial operations, for the first half of fiscal year 24 came to 732.9 billion yen, and the end of term balance of net cash at the end of first half came to 3 and 356.6 billion yen. Next, I would like to talk about the forecast for fiscal year 2024. Firstly, speaking of Honda Group's unit sales, compared to the previous forecast, in motorcycle operations, considering the decline mainly in Asia, forecast is for 18,080,000 units. In automobiles, 4.1 million units, considering the decline mainly in Asia. And in power products, 3.85 million units in view of the decline mainly in North America. Next, I would like to explain the factor analysis of pre-tax profit compared to the actual results from last year. First, operating profit is forecast at 419.2 billion yen, up from last year's results. To explain the contributing factors, impact from sales is forecast at positive 371.6 billion yen due to growth in unit sales of automobiles. Selling price and cost impact is positive 394.0 billion yen due to effect from our pricing in line with enhanced product value as well as lower raw material prices. Expenses impact is expected to be negative of 321.4 billion yen due to warranty-related expenses and increase in selling expenses. R&D expense impact is negative 51.1 billion yen, and our currency effect is forecast at positive 26.0 billion yen. Pre-tax profit is forecast at 515.4 billion yen higher, considering the decline of 42.4 billion yen in equity in earnings of affiliates due to decline in automobile unit sales in China, and gains of 138.6 billion from higher interest received. Next, I will explain the contributing factors in comparison with the previous forecast. Operating profit is forecast at up 200 billion yen compared to the previous forecast. To give you the breakdown, impact from sales is a negative of 69.0 billion yen due to unit sales decline. Impact from selling price and cost is a positive of 129.0 billion yen due to effective pricing in line with enhanced product value and lower prices of precious metals and other raw materials. Impact from expenses is a negative of 163.0 billion yen due to increased warranty expenses. Impact from R&D expenses is a positive of 9.0 billion yen, and currency effect is expected at 294.0 billion yen. For pre-tax profit, our forecast is up 210.0 billion yen, considering the decline in equity in earnings of affiliates of 110.0 billion yen due to decline in automobile unit sales in China, and increase of 120.0 billion yen from higher interest received. Lastly, the forecast for capital expenditures, depreciation, amortization, and R&D expenditures for fiscal year 24 is as shown. This completes my explanation. Thank you very much for your attention.
Thank you very much for your attention. Now I'd like to take the questions from the floor. And we have already provided the Zoom network for the questions from the media. And because of the interest of time, please limit your questions to 2 questions per one person. Thank you for your cooperation. So please raise your hands. Use the raise hand button on the Zoom function if you have questions, please. So first question from Yomiuri Shimbun newspaper, Mr. Nakamura, please. Can you hear me? Yes, please. Nakamura from Yomiuri newspaper. I have 2 questions. First one is our semiconductor procurement situations, please. In Japan, China, North America, in the different regions, what is the status of the semiconductor procurement, and what is the outlook for the future about semiconductor? Second question is the sales reduction, decline in China. What do you think is the reason for that? And do you have any idea to recover the sales after the third quarter onward, please? Thank you for the question. So let's start with the semiconductor procurement. On the whole, recently, we have made great improvements on that. This fiscal year, specifically in the second half, we have no problems, almost no problems today. In the first half, we had a little bit of the issues remaining. However, as of now, we have no such problems in China, Japan, and the United States. The differences in the regions, actually, there's none at all. No regional differences. Last fiscal year, we started direct conversation with the semiconductor suppliers, and for most of the semiconductors, we have alternative sources and so on. And thanks to those efforts, we have made good improvements recently. And then last year end, we had our priority of the semiconductor procurement in North America so that we can support the production and sales in North America. And that was actually what happened as well. And for this fiscal year, in China, market is a little bit slowing down. Our businesses there is slowing a little bit, and we now decided to use the semiconductor parts for the Japanese market instead. With that, we can increase the number of the sales volume in Japan. And going forward, in this spring, at TSMC, and we had a decision to have a strategic collaboration, and we also have other collaborative relationship with the other semiconductor suppliers. And we now have a software-defined trend, and demands for the semiconductors will be higher going forward, so that what we like to do is to be ready to catch up with that. And I think second question is a sales decline in China. And there are two factors behind here. And one is, as you know, tax deduction measures like for NEV, new energy vehicles. With that, the NEV sales is expanding in China, and Honda has ICE or have hybrid. Those are our model lineup there. Because of that, we have some difficult situation. However, though it is on a bit of a decline in the ICE market, in a very specific market of ICE, in fact, like a B category SUV, we are not winning by other companies. We have some struggles there, but we are turning to the BEV focus more. And from 2024, we are going to launch 4 models of BEV so that we can catch up with the market. Thank you very much.
Thank you very much, Mr. Nakamura. The next question is from Mr. Noguchi from NHK, please. This is Noguchi from NHK. Yes, we can hear you all right. For the results, financial results for the first half, I believe they look very good in terms of numbers. So I'd like to ask for your ideas on wage raise. It might be a little bit earlier to ask about this, but I'd like to ask you about your thoughts on raising salary wages. Is one question is okay? One question is okay for yes. I just have that one question. Yes, thank you. Okay, about raising wages, wage hike. we need to, of course, think about this in terms of the global context. But for example, if you look at the States, U.S. market, the UAW issue was there, and then we ourselves, of course, would like to take appropriate actions. If you think about the wages in Japan, last fiscal year, the salary base up, the regular wage hike, we did it at the beginning of this fiscal year. But for next fiscal year as well, we would like to take proactive actions, considering the government's guideline as well. And then we would like to, think proactively toward raising wages possibly. You have anything to add, Mr. Fujimura? Well, as mentioned, if you think about the Japanese, I believe you must have asked about the situation in Japan. But if you think about the recent inflation that is happening also in Japan, we need to consider that. And also because our business performance has been growing. And then, of course, going forward, we will see new business. We will go through this transformation to electrification of vehicles. So that would be our second transformation, which is supported by human resources. That's been our CEO's idea. So for this year, fiscal year's salary raise, and then going forward as well, we would like to have very earnest discussions. We have had earnest discussions between labor and management, and that's where we are here. And then so for going forward, we like to continue this trend, but still the spring offensive timing is still far ahead. So we will continue a discussion with the union. So we will, and then we will think about investing into human resources or human assets.
Thank you very much, Mr. Noguchi. Next question from Nihon Keizai Shimbun, Mr. Okinaga, please. Nikkei Shimbun newspaper, Okinaga. Thank you very much. I have two questions. First one, the up revision of the forecast is a good result, and recent China is now down revised instead. And in terms of the sales revenue, for instance, factory restructuring or the other measures and so on, do you have any idea about that? And second question, maybe we can start with question one. First question, in China, we have our production capacity, 1.49 million car production capacity. That is what we have. As we announced before, we have two joint venture entities over there, and we have 120,000 unit capacity BEV specific production companies in two places. And then that means we will have a 3.4 million, 173 billion or so. And we have, of course, discussions with the JB companies for the ICE production area specifically, so that we can try to reduce the fixed cost of the ICE production, speaking of the restructuring plans and so forth for the factories. And also incentives. As of now, ICE hybrid, those are our main business models, and we need to kind of support sales by using incentives in this forecast we are sharing today, especially in the first half. We are going to support current level of the incentives to continue to support the current ICE businesses. And the U.S., the economy is good in its sales rising. However, you have a little bit of a down revision. And what about we have delinquencies of those repayments, loans, and what do you expect the economy in the second half onward, including the yen depreciation? A part of the question will be supported by Fujimura-san. And in terms of the interest rate hike, of course, it's like an incentive kind of thing. American Honda Finance company has a business, and American Honda has the business in relation to the incentives. But till now, we have a credit score assessment, and the customers we have a good credit assessment to start with. And then because of that, we do not have a big impact as of now. And trading values of the cars index shows a bit of a downtrend of the prices of the used cars. However, the level is still higher than the conventional used car price level. And bad debts and so on, we have some provisions for that. However, it is not as much as it would impact on the statement of the finance today. Then also the residual values of the used cars, it does not have any impact on the P&L as of now. And maybe my colleague can support a bit. I have nothing to add. Numbers, maybe. After COVID, in the United States, we have support to the families and so on, subsidies to them. And rate of the delinquencies, the bad debts, is actually a historic level that is very low at the moment. And delinquency levels a little bit rising today. However, the bad debts rate is also rising a little bit. However, still it is 0.5% of the bad debt levels. And in a way, this is the situation where the situation is returning back to the pre-COVID level. And it is a kind of course loss sort of orientation to us. However, in a way, it is a normalization too. During the COVID period, finance businesses, we had a 300 or 400 billion, and it was like a reversal of the loss cost or something. However, for that amount, for that part, 250 billion operating profits actually generated from the finance businesses. And 2-3% of the credit of the finance, that is the kind of the businesses of finance. But what I can say is that it is being normalized. And residual value losses in relation to the used car prices. And we have a setting of the residual price level. And it is still on the positive side. That positive range is a little bit squeezed. However, we are now getting back to the normalization mode. And for the residual value part, it will take a little bit more time to have the total normalization. So we have those plans, and we factor in the financial business implication. However, nothing really of a concern. Thank you.
Thank you very much, Mr. Okinaga. The next question is from Toyo Keizai. Mr. Yokoyama, please. This is Yokoyama from Toyo Keizai. Thank you. Yes, we can hear you. I have two questions as well. The first is about the financial results. So if you look at the first half and the second half, it looks like the second half is going to see lower operating profit. So I just want to see how you're viewing the numbers, the performance. So you downward revise for North America, and then China is getting sluggish. So I just want to see how you view this. And about the upward revision, so compared to the previous year, if you exclude the foreign currency effect, I guess your profit is going to get less. So in terms of real performance, let me know how you stand. Second question, is concerning this GM. Sorry, you said that you will discontinue development of EV together with GM. So I'm just wondering what that kind of impact that would have on the strategy, and then any countermeasure you have in your mind. Thank you. Okay, thank you for your questions. So about the details of the numbers, Mr. Fujimura will provide some additional information. But if we look at the first half and the second half, I think this is probably is happening every year. But second half is slightly. We tend to look at the second half somewhat conservatively, but at the same time, as a fact, we cannot, in terms of expenditures, we tend to have a bit of a bias on the second half. If you compare those two halves, that's true. And then, as you commented already, in North America, the downward revision in North America, because regardless of semiconductors in the first half, we didn't have a good supply situation in the first half. So maybe that was slightly over 20,000 units, so it's a little bit over, and that happened in the first half. And so that's been incorporated into the first half. And then the sales and production and sales in the second half, if you look at the capacity in North America, it's almost at full capacity. So some of the parts shortage we had in the first half at the in the first half at the supplier, we cannot really recover that in the second half, and that's why it looks like that. If you asked about the real performance, so you said exclude the currency effect. In our explanation, actually, this one compared with the, let's say, comparing with the last year or the same period last year, the currency effect is very limited. The presentation you've seen, I'm sure you've seen it. The currency effect is only 26 billion. So that is against the last period. And then particularly if you look at the operating profit, it's a 53.7% increase. A lot of it is coming from automobile sales and production and sales expansion. And also we were able to leave the sluggishness from the shortage of semiconductor. So because of that, and then of course we had some temporary warranty cost, but we have been able to get to almost to ROS of 5%. So we were at 4.7%. So this is only we had some just temporary warranty expenses, but we were able to show good expansion of automobiles now that the shortage of semiconductor has ended. So I guess that's the answer to your first question. And then in terms of assessment, so we are trying to aim for 7% or higher ROS on 2026 fiscal year or later. And then this is a 6%, this 1.2 trillion is 6%, but I think we are making progress in line with our plans. And about the second question, the terminating the joint development with BEV together with GM, of course there is impact to the strategy. However, we will launch it from Honda's global BEV, and mainly North America, starting from fiscal year 26. We want to maximize the use of this platform, and then so I think we can avert any impact from this termination of this joint development. Any numbers you want to add to this? Okay. Okay. So the gap between second half and first half. Before that, I would like to explain to you how the numbers for the first half were put together. As Mr. Aoyama just explained, the volume expanded in automobiles in North America in particular. That was conspicuous. That was in the range of plus 240,000 units. So I think this unit sales contributed greatly to operating profit. For motorcycles, almost it was 60,000 units. So it was just a bit of an increase. However, the Vietnam, which is our most highest profit-generating market, even though they were in negative, Brazil, Thailand show good growth, and then that was. Of course, we used to say that if we stumble in Vietnam, it hurts a bit. But I think with other markets contributing, it has evened out a lot for motorcycles, so that we have been able to earn some good profit in automobile as well. So we got 760 billion, so 6%, 7.2% ROS. A bit of a disturbance was the warranty expenses for we had 56 billion automobiles, and then we had 56 another one for automobiles. So total of close to 120 billion yen for warranty claims. So that was a provision. So we inconvenienced our customers a lot. But I think if we eliminate this, I think we should have been able to attain RS of close to 8% for the first half. And against that first half, I think we should be able to take away 700 billion. We take away from 1.2 trillion yen. So that would be 500 billion yen. So the volume will be higher. So even if we consider incentive, it would be a bit of a 120 this billion provision, and then the provision for the warranty that would be that doesn't happen with the first half. It was for the second half, so 100 billion. So that would be 220 billion, but as a total, that comes down by 220 billion yen. So there's a bit of a difference between like a 400 billion yen between first and then second half. But if you look at the currency, of course, the yen-dollar rate is the same. But with the other currencies versus the dollar, they are getting better. So we consider that into the second half. And then also, this was mentioned separately, but to the Yachiyo industry, we are doing a TOB. We'll complete the TOB in second half against the Yachiyo industry. And then the same thing as Honda Lock last year, we will have a bit of an impairment loss for this second half as a temporary charge. So with the Yachiyo impair loss and the currency, it will be like lower. Second half will be lower by 100 billion or so, and then so we still have the performance bit of a difference is 300 billion. This would be majority would be the expenses, and also to the supplier because they have suffered from inflation. So for Japan and in the States, for some of the suppliers, we do provide some. We are allowing them to raise the cost a little bit to survive through this. So that was a bit of a disturbing noises. So you might have found it difficult to all put it together, but that's how our situation is.
Thank you very much, Mr. Yokoyama. Next question from Asahi Shimbun newspaper, Mr. Wakai, please. Mr. Wakai? Well, he has exited from the network. Next person then from Nikkan Jidosha Shimbun, Mr. Mizutori, please. Automotive Daily, Japan. Mizutori speaking, Nikkan Jidosha Shimbun. I have two questions. First one is numbers to confirm. From April to September, OP waterfall over last year and also forecast for the full year from last time. You have ups and downs for the operating profits and the impact by the prices. What is the breakdown about it? And also for the suppliers, you may have a price pass on transfer of those incremental prices. That's the question and one. And second one is BEV. We have EV demands being a bit slowed down, and I can see that in Ford and other companies, and they seem to be squeezing a bit on the investments on the equipments. But you say that you're going to be ready to produce 2 million BEVs and so on in 2030 or so. And I understand you have no change to those plans for the future, but do you have any idea to kind of stop and then decide to slow down a little bit, for instance, because of the those demands, Mr. Oyama? So I'd like to start with the second question first. So I have no idea to decelerate our speed of the businesses. However, I wouldn't deny the businesses slowing or softening, and especially in the U.S. market, the demands is a little bit soft now, and as compared to the past speed, the growth speed is a little bit slowing down, and we really watch carefully the market trend, and that is what we doing usually, watching out. And in 2030, 40% of the advanced countries or 2 million BEV, that is our plan. And 2035, 80%. We have no idea to change those plans. And in terms of the speed of the businesses, battery joint venture, and so on, the new factories in North America, we have those ideas. And of course, the next things in mind as well to try to form the ecosystem finally, and we'd like to steadily push forward those plans. And the second question will be addressed by Fujimura-san. So first half, operating profits, and a previous focus about it, and the 1 trillion yen for the full year, and we don't disclose the first half a portion of that, but I just share with you the image of the results and focused, and the 700 billion, that was the results. And as compared to the budget level, in terms of the absolute level, value level, we have about a plus 10 billion yen level as ended. And then breakdown inside is we have a yen depreciation, now we have 140 yen instead of 125, and we have 125 billion yen impact by that. And warranty, we have about 115 billion plus, and excluding everything else, it is almost offsetting everything around here. And practically speaking, in the North America, the next number volume. And the suppliers, some suppliers couldn't catch up with the incremental production of the volume. That is a loss of 20,000, and also slowing down economy in China and Vietnam. We have a negative situation of the unit sales of the motorcycles, for instance. We have those decline of the units volumes, and for the motorcycles, as I said earlier, we have Japan, Europe, U.S., Brazil. We have the recovery to cover that, and we have about 40 million sales, 40,000 sales, and we have a 50 billion yen negative. And we had a cost reduction and price optimization, and raw material prices now getting more stable today. And other expenses are also squeezed too. And all in all, we are absorbing those 50 billion and that offsets, and plus 10 billion the net with the depreciation of yen, so on. That is how that is kind of structured for the first half.
Thank you for the questions, Mr. Mizutori. I'd like to ask Mr. Kawasaki from Jiji-Tsushin. Can you hear us, Mr. Kawasaki? Oh, okay. Okay, this is Kawasaki. I hope you can hear me. Yes, your voice is coming through. I have two questions. First one is looking at the different OEMs, many have shown record high. So looking at your sales volume and then operating profit, net profit, if you have any record high, that's what I'd like to know. That's something, it's my first question. And the other question is, in the States, you have the GM Cruise, the autonomous vehicle. I believe in the States you have some, stop suspension of operation. Does that have any impact to your plans to start automated vehicle driving in Japan? Okay, for the first question, Mr. Fujimura will answer that one a little bit later. To answer your second question about the states, the cruise suspension of that, the GM Cruise activity, their activity itself is nothing I can comment on. However, for us to do in Japan, for as we announced, with them GM Cruise, General Motors, and Honda, we forming a joint venture and then starting a commercial operation of a taxi from beginning of 2026. But there has been no change to that plan at all so far. However, having said that, in the States, the situation in the States would need to be monitored closely, and then we need to discuss them closely with Cruise and General Motors as well. But so far, our plan has not changed, including all the relation with the relevant authorities as well. That's what we would like to do. Okay. Okay, so you asked about the record high. So to give you the numbers from answers from first half, operating profit, pre-tax profit, and net profit, on all of those, we have shown the highest. And then of the 20 trillion and then 1,200 billion in profit, that's a record high and the same as pre-tax profit as well. That's for the full year forecast. Thank you.
Thank you, Mr. Kawasaki. From the Reuters, Lusing Daniel, please. Mr. Daniel Lusing. Can you hear us? Hello, please. Earlier, it's kind of related to earlier question. The U.S. cruise automated driving, and actually they had to stop the services by the cruise for some time. Do you think you really owe the cruise? And if you need them really, you probably you may have an idea for further investment in cruise, like a cruise in the difficulty of like a business management. Maybe you can support financially to invest a cruise if needed. Do you have such idea in case? So for this question, whether or not if we have that idea, as of now, we do not have such a practical, specific idea. But of course, if there are changes of the business environments and conditions change and so on, if anything happens to Cruise, who we have a collaboration with, of course, there's a room for consideration. We will listen to them. We will make appropriate decision as needed. And as of now, we have, for your question, of course, of whether or not we have that idea today, I should say no, we don't have any specific idea for the investment as of today.
Thank you very much for your question. The next question comes from Nikkei Business. Mr. Iyama, please. I hope you can hear me. Yes, I can hear you. Thank you. This is related to your earlier question, but the low price ABEV together with GM. Why did you reach this decision? If you could tell us the background, how you reached this decision, that would be helpful. And another thing is about capital expenditures. I believe you've increased it a little bit. So if you can tell us a little bit more about it. Okay, thank you. Why we decided to suspend joint development with GM? Well, since we entered into agreement, we have done a lot of different studies, and as a result of that, both parties reached a decision that it would be better for both parties, win-win for both parties, if we don't do this together. That was the simple conclusion that we reached. So if you ask why, we discussed and discussed, and we decided that looking at the current market and then looking at the potential or our approach to the reasonably priced BEV, we had differences in our thoughts. Okay, about the additional capital expenditures, compared to the previous forecast, we've increased. I guess that's what you're asking about. But this is because we've done some currency conversion. So compared to the last time, we raised it by plus 40 billion yen. So of course, we used to assume 125 yen to a dollar, but now we change it to 140 yen. So for investment outside Japan, we converted back into yen. So this, that's why the substance has not changed. So please, when you look at the chart showing the depreciation and R&D cost and capital expenditure, please look at it that way. Thank you.
Next question. Nikkei Asia, Takei-san, please. Takei from Nikkei Asia. Thank you. And I have a question about the motorcycle businesses. One is a sales forecast in Vietnam. In Asia, you say it is down revised because of the China and Vietnam. And could you elaborate on that, please? What is happening in those countries that made you decide to down revise your forecast? And according to your document, you have a main 5 markets information, but recent if you have any notable situations of other countries too, please share with us market trend today. And second question is electrification, and there was some exhibit on the mobility show. And in the automobile areas, infrastructure is not really catching up with the electrification needs. And in the motorcycle businesses, in the emerging markets, what is the situation of the electrification there? And to deploy the electric motorcycle, what is your plan? So for the question 1, in Vietnam, this year, at around the springtime, the macroeconomy around export businesses soured. Because of that, the market on the whole in Vietnam is shrinking quite sharply. And actually, that situation had hit the bottom already. And maybe in the fourth quarter this fiscal year, we would expect some recovery. And the market in Vietnam is sort of intensified in the south of Vietnam, where the export business is the main business they rely on. And because of that, businesses of export dropped. We have the situation. And China, the ICE motorcycle, it is declining more than our expectations, and the incentives against competitors, that is in place, but we couldn't achieve enough share in the market. Because of that, we down revised it. But motorcycle businesses, we have the decline of the business in China, Vietnam. However, we have already factored in those decline to have this 11.8 billion unit sales of our forecast. And then other notable events or trend. Maybe someone else talked about that before, but we have advanced developed countries, Japan, US, Europe, and Brazil together. We are getting more profits there. And motorcycle businesses were kind of mainly coming from the Asian countries, but now those plus developed countries are letting us good businesses, and that is kind of the particular trend we are aware of. And for the electrification of the motorcycles, already in China, there is a clear the emerging market of electrified motorcycles in China that's in place. But in the next 1, 2, 3 years, the India will be the more kind of notable motorcycle electrification markets. And for the fiscal year 2027 or 8, we are going to try to hit 1 million of those vehicles, and in 2030, 3.5 million or above. That is the number of the units we are aiming at too. And earlier this fiscal year, we now have this new organization focusing on the electrification of power products, motorcycles, so on. And we have dedicated resources there for electrification to deploy those ideas. And then next year, in 2024, we already announced it though, EM1A, Mobile Power Pack E, based moped type vehicle to be deployed in Indonesia, and Mobile Power Pack E based other vehicles will be launched, and we will announce later on about specific news about that later.
Thank you very much, Ms. Take. Sorry, but due to time limitation, we'd like to make the last this next question last. Mr. Ikeda from Sankei Newspaper. This is Ikeda from Sankei Newspaper. Yes, we can hear you. I have two questions. The first one is about the automobile business, the operating profit ratio, how to read this, how to interpret this. It's 4.7% right now, so that's a big improvement. But is this just simply contributed by the sales volume growth, or is it because of the vehicle mix that you are selling, or so that your most profitable models sold best or something like that? And then also for the second half and later, the operating profit ratio, if we look at it from the standard industry standard, I don't think it's sufficient. But for your design and development and car manufacturing, and then new models that you'll be launching into the future, what are your vision? What is your vision for the profitability of automobiles? That's my first question. The second question is, as mentioned already, for the Chinese business, do you have any structural reform? Of course, I guess you would need to do something about your ICE business, but what kind of timeline are you thinking of for changing your business? Is that something you're going to start within this fiscal year? Is it that kind of short term, or is it going to be something for later that you will be spending more time to do something, and then you need to reduce your fixed cost? So maybe some of the fixed equipment might have to be disposed of, or you might have to do some adjustments to human resources. Would that have an impact on your business performance? If you could tell me about those ideas to the extent you can, that would be helpful. Okay, thank you very much for your questions. This 4.7% of the operating ratio. It's not that I'm satisfied, but we had some temporary warranty costs. So if we exclude that, I think we are above 5%, I believe. And then for 2027, we wanted to bring it to over 7%. And then, so we wanted to have it higher than 5% already this fiscal year. So in that sense, I think we are getting to the level that we're getting close to the level we're trying to get. Of course, the sales volume contributed, but we have been doing something particularly for the North American market that we wanted to have a lean manufacturing and management. So by starting from model year 21 Civic, and then Accord and CRV, those mid-sized vehicles, cost structure, they has improved. And then also we have been able to do a good pricing in line with the product value. So the combination of those two led us to this current profit ratio. And then going forward, actually, it's if you ask us if we had a very profitable vehicle models, the product mix don't change really. We have a C segment, this CRV and Civic, and then we have D sedan, Accord. That's our best-selling volume cars. So that hasn't changed. However, in each of the models, we have been able to raise our marginal profit ratio. That's our situation. But as you've said, if you look at the across the industry, I'm aware that it's nothing really to be proud of. Okay, next about the China business structure reform. We would like to start something at an early stage. We are keenly aware of that. However, having said that, we have a joint venture partner, so we need to discuss and then thoroughly, persistently discuss with the joint venture partners to come up with some plans for structural reform. I don't have anything I can tell you specifically. Anything you want to add? No, I don't have anything to add here. Okay, thank you very much, Mr. Ikeda. Okay, so with this, we'd like to complete our financial results briefing session. About the financial results material, those are listed on the website. Thank you very much for your attention today.